Great. Thank you so much. Thank you so much. All right. So let's get started. My video should always be off like that. I share the question that I'll be doing here. File, machine replacement. Yeah. So please let me know whether you are able to see my PDF that I've shared there, known as machine replacement. Thank you so much. Great. Great. So then we start right away. So this machine replacement is a common question in advanced FM and in FM. Yeah. So you are getting this great lecture today from RCM College. Of course, you're the best college in East Africa. Best college in East Africa. Our number, this must be a bad person who is writing numbers anyhow. If you want to reach out to us for any inquiries, especially those students who are getting leave now, those guys who have not been studying, I normally call them busy students. Somebody told me, Mwalimu, don't call us lazy. Busy students. They would want to start reading from today. You can reach out to us and we shall be able to give you some kind of a schedule which will be beneficial to you. And of course, if you are a student in our paid groups, any paid groups, such kind of programs, like now what you're doing today, nobody will need you to pay even a single cent, because already you paid your price early. So we have a machine replacement question here that I would want us to do in 37 minutes. Please mark the time, 37 minutes, where we reach with 37, within 37 minutes, we should be able to stop there. So you're told Kabusa is considering replacing its existing production machine. Existing machine, the original cost was 8 million. It was purchased 2 years ago. Original useful life is 5 years. Original salvage value was nil. Revised remaining useful life is 5 years. Revised salvage value is 1.5. The current selling price is 4 million. Then we have a new machine. Cost is 12.56. Useful life, of course, now, the useful life of the new machine should always have an equivalent revised useful life of the old machine. So the useful life of the new machine will be equal to, the revised useful life of old machine. So you can see the old machine, old machine. The old machine has a revised remaining useful life of 5 years. So the two must be the same for us to be able to compare them side by side. So they're telling us here that the salvage value for the new machine is 4 million. Additional working capital is 2.6 million. Working capital will be recovered after 5 years. They have given us earnings before depreciation and tax for the new machine and for the existing machine. Other information, cost of capital is 13%, tax rate is 30%, depreciation method is straight line. Required using the NPV technique, advise whether the existing machine should be done what year, should be replaced. So what do you think? Is this question so simple to the extent that we say, Mwalimu, this question, let's not do it? Is there somebody who will be able to say, Mwalimu, this question, don't do it. This question, we can handle it ourselves. This question, we can handle it yourself. Don't do it. It can't even come in your exams, Mwalimu, in our exams, Mwalimu. Anybody who is that courageous? I'm looking for those very courageous students. So do you want us to do the question? Do you want us to do this question? Yeah, somebody has already shared. Do you want us to do the question? All right. Then it is not that easy, because me, I thought it was supposed to be a straightforward question. But when I get my students telling me, Mwalimu, just do it, I'm quick to listen. We are listening to the ground, right? What is the ground saying? What is the ground say. The ground wants Mwalimu to do the question. Now, ladies and gentlemen, please listen and listen to me very well. Please listen and listen to me very well. What am I going to do in this kind of a question? So in this kind of a question, this is what I shall do. First, allow me to show you something. If you're given profit before depreciation and tax of say 10, and then they give us depreciation of say 3, all right? And the tax is 30%. Is there somebody who is able to give me the cash flow here? Because remember, we don't discount profits, we discount cash flows. We discount cash flows. So there are too many methods of doing this. The first best method is to take the depreciation profit before depreciation and tax the way it is. All right. Go ahead and tax this times 1 minus 3. And then you add what we call a depreciation tax shield. Please write this in the full. This is the best method. You take profit before depreciation and tax. You take away tax. You less tax by multiplying this with 1 minus 3. And then you add a depreciation tax what year shield. So our PBT is 10. Multiplied by 1 minus tax, that is 1 minus 0.3, plus depreciation tax shield. Depreciation tax what year shield. So the depreciation itself is 3 times the rate of tax, which is 30%. So Lizzie is giving me a figure of 7 point what here, somebody? 7.9. Allow screenshot. Sorry for that. I should be able to allow that really. Yeah. Sorry for that. I should be able to allow. So host tools, participants, request, share real time. Screen capture meeting window, yes. So they are getting what here? Somebody, they are getting 7 point what here? Somebody, they are getting 7.9. There could be a student who does not know this concept. Some students will tell you, Mwalimu, you know what? Method 2. Some students will tell you, Mwalimu, we have this profit before depreciation and tax of 10. Go ahead and less depreciation, because in the finance depreciation is normally allowed for purposes of tax. So we less depreciation of 3. So then they are able to get what here? 7. So now remember, this will be profit before tax. These are very procedural students. They'll come and tell you, Mwalimu, pay tax to the government. So less tax. Tax is 30% of the PBT 7. Can somebody give me this tax amount in Kenya shillings? 30% times 7.3 times 7. Please give me this figure. Emily is giving me 2.1. So you less this from 7, and we are able to get a PAT. So 7 minus 2.1 gives me profit after tax. Virginia is getting 4.9. If I'm using this approach, then I must come and add back depreciation in totality. Add back depreciation in totality without multiplying it with tax. You add back then a monetary item known as depreciation, like that, and you'll end up getting 7.9. So for this very question that we want to do, which method would you want us to stick with? You have to agree. Method 1 or method 2. You can see both are giving us the same answers. The first method, the first method. Thank you so much. The first method, the first method. Now I can see we are 190. 190, which is really, really good. So now we start counting by 37 minutes. Sorry for that. I can't see the screen. Are you guys able to see my screen? Are you guys able to see my screen? So maybe you could advise that student, Somebody is saying no. Charlton is saying no. What normally happens is that students are not able to see my screen. What normally happens when they are not able to see my screen? What happens? Is it my setting? So where should I get that setting? Is it my setting that they cannot see? Wanatumia browser. So wanafaa watumie nini? Log out and then you get back. When you join straight from the browser, scroll from the start screenshot. I can see the screen. The internet maybe. They should join with the app, because you see the app, you are always able to do what here? You are always able to update it. Use the app. It's because, Mercy, for the phone you're using the app, you must be having the app on the phone. You can change the setting here. Wapi Vero ni change. Wapi ni change. Please guide me, Vero, then I get to change. Because I don't want anybody to suffer, especially during these last minutes. I don't want anybody to suffer, really. Where am I supposed to change, really? I don't know. Please guide me. I don't know. So, like here, where do I go? Is it under general? Play, join, and leave sound note. Where do I get this? Wapi window. Here, I don't think I go back. Okay. I go back. But I'm able to see. So I've gone back. Please guide me. Please guide me. You see, leave the meeting and join again. Wi-Fi issues. They should fix the Wi-Fi issues. Back tena. So back nitaenda wapi? Nitatoka kwa back nitatoka kwa nini? It is their network. It is their network. Tuendelee Aki. So Terry, you don't want to care about your colleagues who have issues. You don't want to care about your colleagues who have issues. It's clear. Help, just get the app. Yesterday, I suffered. Okay. Sorry for that. So there is nothing I can do. Please now consult YouTube or whatever. Yeah, let them leave and join again. Thank you so much. So this is the question I'm doing. So we have here the existing machine, and we have a new machine that would want to bring the board on board to replace the existing machine. This is a very simple question that I should be able to get all the marks. How do I get started? And you can even memorize this. Yeah. So remember, the very first thing that you need to do, ladies and gentlemen, here is to find the amount to be paid today. You must find the amount to be paid today. All right. Now, this amount to be paid today, there is only one technicality. Once you get this right, then you will be okay forever. You see, we are going to dispose the old machine. We will bring in a new machine. When we dispose an old machine, there will either be a gain or a loss on disposal. This is what disturbs many students. So first of all, give me the gain or a loss on disposal of the old water machine. So here you'll have to compare what we call the net book value versus what here, the selling price. You compare the two. Yeah. I don't have a problem with the selling price. What will disturb some of my students here will be the net book value. How do we get this net book value? To get the net book value, you will take the initial costs minus accumulated depreciation. You take the initial cost. Yeah, you take the initial cost minus accumulated what here? Depreciation. Yeah. So initial cost, I've got no issue at all. So I have to get accumulated depreciation, but first, I will be able to, first of all, get depreciation per annum. Remember, we are talking about the old machine. We are talking about the old machine. So this old machine, ladies and gentlemen, are you able to see the old machine? The old machine. The very original cost that is supposed to depreciate here is 8 million. 8 million. We purchased it 2 years ago. 2 years ago. And the original useful life was 5 years. Original salvage value is nil. Now, ladies and gentlemen, remember, our depreciation here will be initial cost minus scrap all over number of years. The initial cost of the old machine you have told me was 8,000. I can cut these zeros. 3 zeros was 8,000. We subtract the scrap, which is what year? 0. We divide by the number of years, which you have seen there were what year, somebody? 5 years. We divide by 5. Thank you so much. Thank you so much. So then this one, seller is giving me 1,600 per annum. How many years have we stayed with this machine? This old machine. The old machine, you can see we purchased it 2 years ago. So it has lost value for 2 years. It has lost value for 2 years. Therefore, total depreciation. Very easy. They normally test this in AFM and FM. So total, which is the same as accumulated, will be 1,600 times 2, which I can see most ninjas have given me, 3,200. All right. Now, the gentleman, then you should be able to give me what we call the net book value. Net book value gave me the formula. It is the very initial cost that we bought this machine, all right, minus the total value lost to date. Total value lost to date is 3,200. Total depreciation is 3,200. So I'm being told this one here will give us 4,800. So this asset book-wise is worth 4,800. And then we sell it for how much? Is there somebody who is able to see the selling price? We are told that this old thing, we shall sell it. You can see the current selling price is 4,000. And we are cutting the 3 zeros, eh? We are cutting the 3 zeros. So it is 4,000. So are we going to make a profit really or a loss? Are we going to make a profit or a loss? It's a loss on disposal. A loss on disposal. So remember, to get profit, we normally take selling price minus the worth of the machine, net book value. The selling price is 4,000 minus NBV of 4,800, which gives me a negative profit, which is what here? 800. What somebody has called a loss on disposal of 800. Yeah, I've also seen some students who are crazy nice. They are crazy because they are going the longer way, but at the end of the day, they are able to get the same answers. They'll come and draw here a disposals account. So when I dispose this very same machine, I will go to the machine's account credit, the machine's account with the NBV. Then you debit disposals account. So you come and bring NBV here, 4,800. And then you receive the money when selling the machine. When I receive the money, I debit bank, I credit disposal. So bank, 4,000. Then the balancing figure, if the balancing figure comes here on the credit side, becomes a disposal loss, which will be 800. So this is 4,800. So the disposal loss, it will be credited on this account, but you debit the P&L. Why should I go through all this? Simply because I want to impress my examiner. The examiner, most of the times, these examiners, you cannot be able to impress them. You straight away go through this approach. Say the profit to be obtained will be the selling price minus the net book what here minus the net book value. This approach, I love it. I love it. So I'm getting a loss on disposal. When you get a loss on disposal, what happens with you and the KRA? You know, if it was a profit on disposal, KRA will have told you, hey, pay us tax on that profit you earn. But now that you've made a loss, what is going to happen? Now that you've made a loss, don't tax forward it. Uongo. When we make a loss, we get tax savings. On disposal loss, 30% of 800. Do you know why it is a tax saving? Because you'll be able to use this loss as an allowance in your P&L, isn't it? You'll be able to use the loss. So when it is a loss, you get savings on disposal. And I'm being given a figure of what here? Here already you are earning marks. Already you are earning marks. You're earning marks. So up to here, ladies and gentlemen, I would want us to really confirm that you are together with Mwalimu shout sana uongo. Are we together really? Thank you so much. Thank you. It is at this juncture that I need to come and give them what we call the initial replacement outlay cost. Initial replacement outlay cost. How much? Let's speed near to am I very, very fast really? I don't know. Am I very, very, that's why I'm asking you guys to confirm whether we are together. I will not want to do it. I would not want to do it like too fast again. No. It'll be sad. It'll be sad. I don't want to do it all. Of course, I'm targeting at 7, but I don't want to do it like too fast. No. If it's too fast, we'd rather slow down a little bit. Thank you for that. Let's slow down a little bit. So if I go buying this new machine today, how much will I spend? How much will I spend? Of course, there will be the cost of the new machine. This you have to pay today. Cost of the new machine. So the new machine will be costing how much? The new machine will be costing how much? So the new machine, you can see this you have to in a car. It is not 12.56. We must be very, very consistent. It is 12,560. We are cutting only 3 zeros. We must be very consistent. It is 12,560. You'll be told to pay that today. It is 12,560. What else am I told? What else am I going to be asked to pay today? If it's the new machine, ladies and gentlemen, you can see here, this new machine, these ninjas will have to ask me to give them working capital. You are seeing here, they'll tell me to pay them working capital because the machine will not be able to work on its own. Working capital. So in this case here, add working capital. Working capital of how much? 2,600, 2,600 working capital. 2,600. If I'm going to bring this new machine, I will get relief by selling the old machine. The old machine will be sold. At least that will be able to finance my new machine venture. So in this case here, I will talk of less cash from selling old machine. Are you able to remember that selling price? If it had installation cost, I would have added it. Yeah. So less cash from selling the old machine. We were able to get 4,000 if you remember. Now this, of course, we are subtracting, eh? Yeah, because it's a relief on us. It is a relief on us. Is there any other thing that you guys are able to remember that we need to bring here? The tax savings, you guys, you are so brilliant. Because when I sell the old machine, I'm going to make some tax savings. That should be able to give me some kind of what here? It's like KRA paying me back for making a good decision. So less tax savings. So remember, incomes, we subtract it. Because you see, we are looking at cost. So costs are positive, incomes we are subtracting. So tax savings, if I remember, no, it was not 800. Who is this confusing me? No, I'm the one who's confusing myself. The tax savings, you guys gave me a figure of 240. So then, are you able to come in here and give me the net cash paid today? When we say today, it means, ladies and gentlemen, that this is cash flow at time zero. Cash flow at time zero. When I'll be getting the NPV, I'll be able to subtract this without discounting whatsoever. So it is 10,920. Now, ladies and gentlemen, thank you so much. Thank you so much. This thing is very procedural. Now, after we get this initial replacement cost, now we go to column by column comparisons. I.e., figures for the new machine versus figures for the old machine. Very important. This is really, really important. Really, really important. So this is column by column comparison. Column by column comparison. So, and I would want us to start with depreciation. And now remember this column by column comparison, we are going on a per annum basis, what we call now moving forward. So the time frame must be the same for the two machines. So moving forward, the 2 years have lapsed. Now we are remaining with the old. Now we are left in this case here with what year? 5 years. 5 years. All right. Now, so moving forward, so we start with this old machine. So the old machine, using a straight line method, is there somebody who can tell me how much will be the depreciation for the old machine? They are getting 660. Moving forward. Remember, you're talking of moving forward. So remember, the formula is really easy. The formula is really easy to get, ladies and gentlemen, depreciation. We are taking here the initial cost minus what here, somebody? Scrap value, all of a number of years. Now, so you see, my very, very good students, now we are doing, now we are through with this. We are through with it. Yeah. Remember, in total, the existing machine had 7 years. 7 years. Because we have these 2 years. We acquired it 2 years ago. And then you can see, no. Revised remaining. That's what they're saying here. Revised remaining life is 5 years. Revised remaining life is 5 years. Now, please listen. Because if you get this right, you can never ever go wrong. When I'm talking of the new machine, I can see the cost of the new machine. You guys had given me the new machine. Cost of the new machine, you guys had given this to me. Mnakumbuka the new machine? It was 1240 somebody. Was it 12,560? Minus. It has a scrap value, my good students. This new machine. The new machine has a scrap value of 4,000. We are cutting 3 zeros. Divide by, you can see, first of all, this new machine, the new machine, ladies and gentlemen, has got what here, somebody? 5 years. 5 years. So are you able to give me this depreciation for the new machine? 1712. Thank you so much. What confuses my students mostly, and I don't want you to get in this problem, when I'm comparing this new machine and the old machine, here, for the old machine, I cannot use initial cost. For the old machine, I will use net book value for me to have the two. In this case here, having the same period, number of years being 5. So here for the old machine, I shall use net book what here? Net book value. What is the net book value that you had obtained with yourselves for the old machine? Is there anybody who is able to remember the net book value? We got 4,800. After revising, do we have any scrap value? Do we have any scrap value? After revising, my very good student, after revising, you can see here, we have a revised salvage value. Remember, originally salvage value was nil, but after revision, we have a salvage value revised there of 1,500. 1,500. Now we divide this by what here? By 5, which then will end up giving me what figure? Somebody here, they are telling me 1,500. All right, I love that. Now, are you able to give me the extra depreciation of the new machine here? Are you able to see the extra depreciation? $660. Where are they getting 660? I don't know. Where are they getting the 660? This one here, for the old machine. Who gave me 1,500? Okay, I know why. I'm really sorry. I know why. This guy was giving me this value. So please repeat. How much do we have here for the old machine depreciation now? 660. Thank you so much. And therefore, the extra depreciation will be this 1712 minus this old rickety jalopy depreciation, 1712 minus 660, which will give me, ladies and gentlemen, I'm told 1052. This one, as a finance expert, I know really helped me. This extra depreciation will shield me from taxes. All right. So then you'll be able to come and give me what we now call the depreciation tax shield. DTS. The rate of tax given is 30% times that 1052, which will end up giving me what figure? 315.2. Now, for bringing in this new machine, I will be getting a DTS, a depreciation tax shield of 352. Now, ladies and gentlemen, once you have gotten this depreciation tax shield like that, I can assure you, we are at home and dry. Because now it's about cash flow. 0.6, 0.6, not 2, sorry. 0.6, I've not understood that. 0.6, I haven't understood that. Admin, please ask again. Hapo kwa last, DTS. Sorry. I would want us to move slowly. So it's supposed to be 315.6. Sorry. So up to here, are we really together? Up to here, are we really together? Up to here, are we really together? Yeah. Thank you so much. Now, after that, we are still doing the comparisons, but now we go to straight away what we call now the extra. This is the thing, the extra operating cash flows. I mean, why do we want to bring in a new machine? To give us additional operating savings, to give us extra operating cash flows. All right. So remember here, you need to come up with that table. Yeah. So we have here, you have to be very careful with this. 1, 2, 3, 4, 5. Yeah. So we have the new earnings before. I like using, I like using profit. Yeah. For the new machine. And then now we have what here? The old profit before depreciation and what here? Tax. So then are you able to give me these numbers? My very good students, from the question provided, are you able to really get these numbers? You can see here. You can see here, ladies and gentlemen, we have the earnings before. So this is what we call PBDTS. PBDT. So simply copy that table the way it is. The way it is. You copy this table the way it is. So I can see 5,400, 5,400, 5,400, 5,400. Remember, there are 5 years, all of them now. The older you copy it the way it is. 2,200 the first year, second year 2,600, 2,400 again, 3,000, 3,400. Please copy up to there, and once you finish, say Y for yes. Thank you so much. So additional profits, additional EBDT. So you subtract, isn't it? Together in incremental. Together in incremental, you subtract. Oh, mine is different. Ooh, where am I getting these figures from? 54, 5,400. 32, 28, 3,000, 2,400, 2,000. So my figures are different. Where am I reading them from? Is there, which one is different? Old yako iko wrong. Inafaa kuwa ngapi? Ya kwanza ni 3,200. Ya pili ni ngapi? Where am I getting these figures from? I know why. 2,800, 2,800. Sorry for that. 3,000. 3,000. Then we have here 2,400. Sorry for that. And then we have what here? Somebody? 2,000. 2,000. Thank you so much. Thank you for the correction. But now, are we together up to here? Are we together up to here? Thank you so much. Thank you so much. Now, ladies and gentlemen, please listen. Remember, I want to get my cash flow. And I started by showing you the cash flow. How do we get cash flow? You get the PBDT, you take away tax, and then you add the depreciation tax shield that we got from the beginning there. So then the additional, please subtract here. Please subtract here. Year number 1, what is the incremental PBDT? BJ, 2,200. The second one, what will be the figure here? Second one, 2,600. The third one, 2,400. The fourth one, there's somebody asking a question there, 3,000. The last one, 3,400. Now give me the incremental cash flow. Give me the incremental cash flow, now using this approach. Is there somebody who knows what 1 minus tax is for us? Anybody who could be knowing what is our 1 minus tax? 0.7, because tax is 30%. So multiply each one of these with 0.7. Multiply each one of these with 0.7. And then you add the DTL. Is there somebody who is able to remember the DTL? We got this up there. Depreciation tax rate. So you say plus 315.6. Remember, DTS will always be the same. It's an annual. Yeah, because of straight line, it's an annual thing. So plus 315.6. So if you do it that way, you will be able to give me the annual cash flows very, very easily. So if you do it this way, you'll be able to give me the annual cash flows pretty easy. So you take 2200 times 0.7 plus 315.6. You tell me what figure are we able to get? 2 decimal places. 2 decimal places. I'm being told 1855.6. The second one. So I'm told here 21. 2135. Point to who? 0.6 as well. The third one. 1995.6. Thank you very much. The fourth one. 2415. Point to who? 2415. No. You guys are, I'm lost. I want the fourth one. The fourth one. 26. The fourth one. The fourth one, I'm told. Just 1 minute. Okay. 10 minutes only. Yes. Oh. Yeah. The fourth is 2415, 0.6. And then last one, fifth one is what year? 26. 95.6, like that. Why less 0.7 instead of what year? 0.3. Remember the formula here. So this will be PBDT into 1 minus tax of 0.3, which will be PBDT times 0.7. Hope you're able to see that. Now, remember what we have here. These are operational cash flows. There are other cash flows here that so many students here will always forget. There are other cash flows. During the final year, there will always be other cash flows. Do you know them? Do you know those other cash flows? Yeah, like the salvage and the working capital release and the working capital release. So in short and gentlemen, please just mention there, I'm just doing this procedurally, mention there, add the final year. The final year cash flows. We call them terminal. We call them terminal cash flows. So we have the first one there is the salvage value. Are you able to see the salvage value? Somebody talks to me. Are you able to see the salvage value? A lie. Because moving forward, everything is about what year? Everything is about comparison. Everything is about comparison. So we are talking of extra. We are talking of extra. The salvage for the new machine is 4,000 minus salvage of the old. Extra. So we have here 2,500. 2,500 extra. Then we have in this case here, working capital recovered. So all the machine no working capital. We only have in this case, ladies and gentlemen, working capital for the new machine, which is how much? There is nothing like, it's like 0 and 2,600. Yeah. Therefore, please listen and listen to me very well. The total, therefore, total cash flow, year number 5, will be the operational that you gave me here. The operational that you gave me, 26, 95.6, plus the salvage, extra salvage, plus the working capital will be able to recover. So is there somebody who is able to give us this figure? Please give me this figure. What do we have there? 37 minutes are over. We shall overcome. I'm being given a figure of 77. I'm being given a figure of 77, 77 point something, right? 77, 95.6. Now from there, go ahead and give me NPV calculation. Give me NPV calculation. So NPV calculation, we have the year. So we have the year. We start with 0. 1, 2, 3, 4, 5. So is there somebody who is able to remember the time 0 cash flow? Time 0 cash flow, we calculated with you. Time 0 cash flow, we calculated together. Time 0 cash flow, we got this together. 10, 9, 20. This is a payable. Cash flow, end of year 1, we already have it here. So we have everything really here. End of year 1, we have it. So end of year 1, we have 1855.6. It's a cash inflow. 21, 35.6. 1995.6. 2415.6. 2415.6. Don't forget the 5th year we have a new value. Don't forget the 5th year we have a new value of 77, 95.6. Is a question. I love saying the word questions. For the sake of earning free mark, can lead go a long way of writing salvage value of old machine, then less salvage value of old machine and add recovery. No, these wordings don't give you extra marks. I'm sorry for that. So come here and they give us PV. Have they given us cost of capital in this question? This was a lazy examiner. Examiners of nowadays, they can't give you cost of capital directly, no. A good examiner will give you risk-free, they'll give you returns of the market, they will give you, in this case here, beta. They would want you to calculate cost of equity, and then of course, once you get cost of equity, we have cost of debt, they would want you to get the worker car on your own. That is what good examiners do. Because as an examiner, you also don't want examiners who are lazy. No. An examiner shall do their homework well. That's a bit important. Yeah. So you have those factors from your tables. You have those factors from your tables. Time 0 is always 1, remember? Time 0, the factor is always 1. So 13% end of year 1. Somebody give me this figure. HP 8850. Thank you so much. End of year 2, what do we have here? 7831. End of year 3. End of year 3. Oh yeah, 6931. Yeah. End of year 4. End of year 4, 61, 33. End of year 5, 24, 28. This examiner, I'm just trying to open up your mind. If this examiner was presently nice, this examiner would have gone straight away. We going to give you an infinity value. And I've repeated, infinity value, the cash flow thing, the Gashagwa thing, isn't it? Good examiners will give you doable. Of course, a bit complex questions, but a little bit doable, right? Because again, even yourselves, would you want to get outside here and then people tell you how easy CPA is? I would rather a situation where if you have been to class, if you have been to a good college like RT and you've been studying a lot, yeah, then you should be able to appreciate how easy the exams are. But I mean, if they make everything easy, it will become disastrous. Discounted card flows. Okay, to be very honest, you guys want very easy exams, to be very honest. Be honest with me. You want very easy exams. Be very honest with me. That you guys are not good people. You guys are not good people. Please help me multiply 2 decimal places. Help me multiply. The first one will be minus 10, 920. Minus 10, 920. For the sake of medium. At least somebody has spoken about medium. Yeah. So year 1, please multiply year 1, 1855.6, 2 decimal places. 1642, I'm being given here 1642.21. 1642.21. Please, let's finish this. Let's finish this up. That is year 1. How about year 2 now? How about year 2? Don't forget that we have another class, financial reporting, advanced financial reporting, at exactly 10 p.m. tonight. 10 p.m. tonight. 0.39. Thank you so much. 1672.39. $1383.15. 1481.49. Thank you so much. The last one, year number 5. Yeah, we have another class. Remember, we agreed, Terry, at 10 p.m. I'll be able to share the link. Financial reporting, advanced financial reporting. If I've ever taught you before, you know how important these last minute classes are. If you have ever been in my class before, you know that those classes are not classes that you should miss. Who is the difference we did for FR? When do we get? You know, now the problem is that I'm not able to make a follow-up. You know, myself, it's class after class. Class after class. I'll be able to talk to Clinton to assist you. So what figure are we able to get when you add up everything? Anybody who is able to add up everything here to give us a figure, which will be the net present value? The final answer now, the very final answer now, which is our NPV. Share the machine replacement question. Yeah, I will share now. So they're getting minus 509.131. That is the NPV. That is the NPV. Somebody wants me to share. But, yeah, there you are. So then in this case here, because it's negative, it means that whatever decision you want to make is not viable. Yeah, whatever decision you want to make is not viable. So what are we telling Kapusa? Remember the company is called Kapusa. Not viable. Don't bring in a new machine. Kabusa Limited, therefore, Kabusa Limited should keep the existing machine. Yeah, i.e. do not buy the new, and that is it. Not viable, yeah, that is it. So, ladies and gentlemen, that is the very end of our class now. I hope somebody has been able to learn something, yeah, however small. I hope somebody has been able to learn, especially the structure. I always love guys getting the structure. The moment you have the structure right, then you will be able to really score lots of marks in the question here. Thank you so much. Thank you so much. And please don't forget to, I told you something very, very important about these courses. We have what we call Power BI and Advanced Excel. All accountants need it set. This is number one. Number two, in this case here, we have what we call artificial intelligence for accountants and auditors. We have a very good offer for you if you give me just 1 minute. A very good offer for you that if you pay for your next semester at least 3 units, minimum 3 units next semester, then automatically you get 10% discount. Quite a rare opportunity. Little window. You get 10% discount, and then you get a free course from the above. A free course and a certificate. Yeah, and I'm so sure you have seen this advertisement somewhere. This advertisement, you know that this offer is strictly ending tomorrow. Yeah, very, very important. We simply want to push you a little bit and give you, this, like now this combined, they are going for about 7,000. 7,000. So please ensure that you are able also to do what here to support Mwalimu. As I support you, you shall also be able to support Mwalimu. Mwalimu now is in the process of converting RCM to a university. You've been able to apply for a letter of interim letter to get that interim authorization. So there is quite a lot. We must build administration block, 50 acres, etc. We need really to get this university up and running as fast as possible. Many of you have told us that Mwalimu, you guys are teaching very well, better than most of these universities. So we need to really get a very strong business school. So don't forget this great offer that will have supported me to make another major move, milestone in our lifetime. So of course, our pay bill is 62,42,839. Account number, the papers you're going to pay for. Yeah. Plus the free course you want. So if it is AI, you simply say AI like that. Yeah. What may have happened there? Of course, perhaps there could have been a few issues here and there, but you can reach out. You can reach out, and then we shall be able to do what here for this semester as promised. I can see like 2, 3 students. Yeah, please, if you have an issue that you are not given a free course, most of you got, maybe we missed out on you, most of you got the free courses, you can reach out to me on this number. Yeah, on this number, give me proof that you paid in. Again, some of you, we say pay by this date for us to add you to the groups. And then you'll miss the date and pay on the 7th. Then that automatically, you can't be added up. Nevertheless, you just share with me that very information, and then we get what here to address the issue. There is nothing that can't be addressed. But many students who know this approach, they have really benefited, because when you get 10% discount plus a free course going for about 7,000, it's like you're going to study next semester for free or at 50%. All right. But now remember, it's not about you committing, it's about you finishing their entire fees, minimum 3 units. For the students who are in the advanced level, who are remaining, say, with the 2 units, we also accept that. We accept that. Or if you're going to pay for BDA, BDA, which is 10,000 shillings, you simply pay less 10%. You pay discounted price of 9,000. Yeah. And then you get, in this case here, the course. You get, in this case here, the course, not course, for free. Great. Otherwise, thank you so much. Yeah, we give certificate here. You can see here. You provide a certificate. Yeah, you provide a certificate. AI for accountants, like anybody who is in the advanced level who will be doing BD next semester or next semester but one, please ensure that you pay for this. You pick this. You pick Power BI and Advanced Excel. So be able to share the advertisement with you. Let's roll this. So the offer is lapsing tomorrow. You guys have not been seeing this. They've been sharing it. The offer is lapsing tomorrow. It is an offer for the bold students. Offer for the bold students. Those students will know that these papers we are doing this semester, we are passing. So we pay for the next term in advance. A small window, we normally target about 400 students maximum. Yeah, maximum 400 students. The other students, of course, we expect you to pay for the small course, this short course independently, and then you pay full fees next semester like that. So 400. Currently, I saw now as at 4 p.m. there, we are about how many? 19 now. I've already paid. Yeah, so ensure that you are in this. And I'm also getting other thoughts. To push these guys here to reach this number, what if I say these free classes, yeah, will only be for those students who have already made this? Will I be fair? I don't know. What if I tie these free classes on this offer? Wow. You know, I'm an A student, right? Most of them will cry. Okay. But you have to promote mwalimu. You must promote mwalimu. Yeah, please get in touch. We address that. Get in touch. We address that. FR, okay, yeah. Yeah, I'll go talk to, like now, right now, I'm now going into QA. I'm going into QA. I'll talk to Clinton to ensure that these courses are uploaded. But also, most importantly, you guys need to support our dream. We need to have a university of our own. Yeah, so we need serious resources. That is like 100 billion or something. Serious resources we shall overcome. And without, in this case here, we don't also want to borrow. Yeah, if you pay for 2 units in the next semester and you are in the advanced level, the advanced level, like the ones who are doing 3 units this time, all right? Now they'll only be left with 2 papers, then that one will qualify. But if you're in the intermediate level, you will not qualify. Not unless you have only 2 papers at the intermediate level remaining. Ladies and gentlemen, please allow me to jump to my next class. Bye-bye. It has been lovely, lovely, lovely hosting you this afternoon as usual. So see you at what time? See you at exactly